60-minute SPCE Virgin Galactic breaking out higher as we can see it, and we're all the way back up to the top now. Let's take a look at this on a daily level, and here we have it. And every time we get a spike in the price, you go straight down. You get a spike and you go straight down. Now that we're going to come up here, we're going to see if the move can get to that resistance line and or test the highs up in here, so that one can do what? Get the right option order entry. And learning how to pick the right strike price and get wholesale. We can see the high was 330 to the $40 puts, and it's based on the fact that as of at the moment, this high is lower than this high. Okay, and this is that daily. So every spike, you go down. Spike, you go down. Now you have a spike, and then we're looking at out of the money, because if we can steal these at a really super cheap price, then the down days, those cheap entries like that based on volume entry, yes, you can have 30, 40 contracts and walk away with your 3.5 to 480 in profits, and bam, you feel pretty good about it. And we do, and we're going to do it if we can get the price to move up here so that this price of $1.94 can drop down toward $1. That would be ideal for us. So one of the things that we do understand going into this is that we have to go up and test resistances in price, where it has dropped up here right at this high in this wick, maybe a little bit lower. If we can just go up here even, right there, the price, and we can go up above this trend line right up here to that diagonal line there, then we're going to be able to learn that we'll be very happy on why we learned to steal the price and get that entry, and then on the reversal day, we get to sell at higher price. And that is what makes it worth it. And that is what makes a very fine day. There's also the $45 puts that one has discovered at $355. The nice thing about it is 620 was the high as we see it, okay, with 2,000 contracts on that strike price of the 45s, okay. But once again, the volume is 4,400 contracts on the $40 puts, okay. And we could see the percent change level markdown versus the percent change level markup in these strike price columns. So the higher that level goes, then they will come down in price on that side. On the $42 call, those were $6, and they ran them up to the high, $13.65, and they did. And the bid's 13 by 13.65. Last print was 13.30 on 217 volume traded on that strike price with 1,900 open interest. So we can see that volatility ratio trade at wholesale prices on this side, because that is the cheapest side with the cheapest amount of risk, even though any dollar that is transacted is risk, and it is. But this is what the option market looks like. This is what it looks like on a percent level. Then that percent change to the upside level, and when these levels get higher, then they go down. Once again, sign up for that free 5-day trial. Visit the new website. Enjoy every minute of it. All the live videos are right there for new ideas that we can come up with, examine, and take a look at the columns that are important and relative to trade management. How much premium did they take out of the put side, and how much premium did they get to the call side? And the higher the premium in the calls, then they come down no matter what. And so understand the strike price and how to get volume at the lowest price and then take profits on the reversal day of a trade setup just like this. And the stock has proven that every spike, it doesn't matter, even right here, boom, it comes down. It does it over here early on and these days, you know. But that was a big reversal and then a pop and a huge reversal to that low today as it was, and then that pop straight up. Yes, sir. And that's the daily. When you look at it on a 4 hourly chart, so it's going to be 4 hours a candle, you can see that breakout straight up. 42.60 would have been a good entry. Then they took it to the high. 49.67, they took it up again. 52.81, and now they just had printed a high of 54.86, and that we did. The 4 hourly because that is a reflection of our daily, and there is the daily price discovery. So now that we've done the discovery, we will move forward with a possible execution in Virgin Galactic. Yep. So we're going to fly up into the orbit and then come down, and then it comes down. And that's why we're looking at stealing the put contracts out of the money at the lowest price. Let it be known